Hello, and welcome to another episode of Decentral Lounge brought to you by GlobalStake, your institutional, truly decentralized, self-owned and managed SOC 2 Type 2 compliant bare metal staking service provider. Today, we're excited to host Dan Roberts, the co-founder of Nayms, a trailblazer in the digital insurance marketplace. Nayms is reshaping the insurance landscape by providing a platform specifically designed for the digital age, focusing on digitally native brokers, innovative carriers, and forward-thinking investors. This platform isn't just about adapting new technology to old models. It's about building a foundation for future of insurance where every transaction is digital, transparent, and tailored to meet the needs of the emerging digital asset market. Join us as we delve into how Dan and his team at Nayms are pioneering truly digital insurance solutions and what this means for the industry. So welcome to the show today, Dan. We're really excited to have you. And let's just start off the conversation by telling us a little bit about your background and what even got you interested in crypto in the first place.
Thank you for the intro. It's better than mine. So Nayms is 5 years old. I've been here for a while. Feels like a relatively old company at this point. But before that, I was led into the space by an interest in social enterprise as a sort of curveball. My career started looking into social enterprise as a business model for lots of different industry verticals. So I never had any specific interest in one industry in particular. No insurance before Nayms. It was purely how can you take a broad philosophy or a business model and apply that in interesting areas. So social enterprise took me through the weird and wonderful journey of ugly fruit and smoothies and sorbets to digital out-of-home advertising on bikes powered by kinetic cycling and all of these sort of wacky areas. I think there was a green bank in there at some point. Just really enjoying the freedom that being able to start something from zero provides. And then, as things get a bit more serious, my introduction to blockchain more generally, which was late 2015, early 2016, was just reading about Ethereum and the sort of burst of innovation that was happening there, and the breadth of industries that were potentially being disrupted by this sort of new foundation that would one day be called the internet, or the next iteration of it. And so I got very excited by that. I had a healthcare concept that I'd been thinking about for a number of years. And so I used that as my guinea pig in this kind of use case, this new technology. I wasn't wrapped up too much in the kind of boom and bust of 2017-18 in terms of investing, but was very much wrapped up in the boom and bust of activity, the energy of the community, and all of the just wild new thinking that was seemingly going on in the space. Lots of different projects putting forward totally new. I think one of the biggest advantages of the space at the time, or of the technology at the time, is it just opened up such a new way of thinking and obviously attracted abstract thinkers. So that was a fascinating space to be involved in. So started a healthcare company. It was called Lacuna Health. It was there to be an electronic trading exchange, or an electronic exchange for for your own health records, so that you could control the ownership of that record and share it with different stakeholders in the healthcare profession, and sort of learning that healthcare was a little further down the adoption curve, I think, in crypto. And obviously we did have 2017-18 and went into I think ETH was down at like $83 or something, and things went very cold and quiet. But by no means did it seem to be slower in terms of the amount of things that people wanted to build. It's sort of, when people say, digital assets, we've reached a point now where it's here to stay. I felt like that was the case about 6 years ago. I'm sure the space has gone through its own, its own, near death moments, but the energy and the the interesting breadth of characters that were there were they weren't going anywhere. It didn't matter what price was or anything like that. So that was very interesting. And then I met a fund called InsurTech Gateway, and they're one of our main investors today. They were interested to know how the new world of capital in the digital asset space could be used as collateral for claims in the traditional insurance space. But they were also interested to see whether the technology could provide a new layer of risk transfer solutions for the space. And obviously there was a growing area of digital asset risk as well that needed protection, and assets didn't match liabilities because you had very you had lots of new risks in a new currency that was very volatile. So covering that always with dollars was a challenge. So that sort of formed the basis of of Nayms. I was introduced to them via a friend. I'd put a paper together on a previous startup that I was working on, which had an insurance, which was an insurance proposition. Just using this technology for a purely fresh, clean slate of risk transfer, and that got me introduced to the fund. And we went through a period of educating each other on what the tech could do and what the industry needed. And insurance is obviously a very famously slow, lethargic place, and very complicated, but almost for a reason. And it's law of large number environment. So innovation is difficult. Some of the wildly successful in terms of fundraising and exposure insurtechs, these full stack insurtechs that we know of, haven't outperformed the most old-fashioned reinsurance balance sheets in the world in terms of loss ratios and things. So it's a difficult place to innovate in, but there's close your eyes and point, and there's an area that needs improving. So that was a sort of great foundation of Nayms 5 years ago, and since then it's really just been, the first 2 years was just deep research into where to start. It really was, you could start anywhere, and it's a temptation as a startup to boil the ocean. So we started with providing fully collateralized ILS contracts, so a full stack of capital could cover a full one-to-one with the amount of risk in catastrophe bonds. And we've since become much more generalized to cover different types of risk. So yeah, quite the adventure.
Very cool, very cool. I am curious. I saw an article recently, it was maybe 2 months ago or so. One of your partners, Aon, and your other partner, Copper, you all just completed a successful pilot. So can you kind of dive into what happened during that pilot, what was accomplished, and where it's kind of headed forward now?
Yeah, so this was a simple pilot around tooling. So the big piece, the sort of education piece is how can Nayms use existing tooling that has paved the way in the space for more years with more parties than Nayms, to bring to more institutional clients, such as Aon. So these are big companies we're talking about, one of the biggest brokers in the world. The amount of boxes that need to be ticked to engage in this new technology is significant, and Nayms doesn't have to tick all of those boxes. So that was a pilot with Copper, so that Copper could showcase the custody and governance technology that they use for big institutions to be able to manage accounts and multiple parties, and and custody off-chain capital and commissions that a broker would earn. And the intention is that can now be used as one of the plethora suite of tools that's available to these more institutional players. So there's two approaches. One is Nayms has its own pick of tooling. We use a lot of Coinbase tooling, for example, for these institutions. But then large institutions may start to have existing relationships with digital asset tooling companies. Nayms wants to remain relatively agnostic to what we can work with. So yeah, this is just part of the education piece on the fact that I think, once you really get into the weeds, and big institutions need to get into the weeds, it's actually not as scary as even they thought. It's just, it requires, that kind of education, and the individuals working at these big companies now are coming with a lot of expertise. So usually it's the people internally educating the rest of their, senior departments and management on why these, this is nothing to be scared about anymore. So yeah, more to come in that regard, but yeah, all part of the education, heavy lift that's constantly required.
One thing that I've been curious about just listening to the conversation so far, Dan, is, you mentioned being originally starting thinking about like in the healthcare industry, and that's notoriously highly regulated. And I know insurance companies tend to also be really, really highly regulated. What kind of challenges have arisen with building out Nayms and what you guys, in terms of product offering and everything else, because of sort of the regulatory regime around these kinds of products, at least in the traditional finance world?
Yeah, I'm not making it easy for me and the team. I mean, our with Nayms, we were lucky, or just took the approach to be very pro regulation from the beginning, to make sure that we built up a certain expertise and understanding of how those two are going to be overlapping, and the development in the macro environment for crypto over the last 5 years has been conducive to that strategy. I've always seen projects, if they don't fail so quickly, to be things that I'm going to dedicate myself to for the next 10 years plus. So it's always been, I'm looking for things that will require a solid building up of expertise. Quick wins and these kinds of opportunities are less interesting. I'm not sure why at times, but that was the approach. Is just you're able to build up something that is tangibly useful for a space if you are there for longer and can start to set precedents with different stakeholders, and that includes with regulators. I mean, the challenge on the regulatory side is being there, adapting and evolving with us. We are fully regulated by the Bermuda Monetary Authority, the BMA, under both an insurance license and a digital asset license. We went through 2 years of sandbox on both of those before we graduated to the full version of both. I think we were the first company to graduate in both of those license classes. And so, Bermuda has provided this phenomenal framework that was quite forward-looking, relatively to globally to different jurisdictions, but obviously are iterating on how that can best serve the companies and their client user bases. And we've been a key part of that, alongside those in our competitive landscape, as well as others in different industry verticals. And that's like a fun space to be. I mean, I was surprised myself that regulation is, we have like great people on the team that, really do this professionally. So I kind of have an oversight of that work, and it's a large part of our innovation. I mean, we say the way that the regulatory and the legal structures fit into the tech is a huge chunk of the innovation of Nayms, very boringly. But if you're going to be transferring if you're transferring value, you need to make sure that you're not transferring the physical value of the token without the legal and regulatory obligations of that transfer, and vice versa. You can't transfer something legally if someone else is still holding the underlying value. So yeah, I would say it is of course full of challenges, but it's a sort of healthy part of the innovation that's it leads to some of the biggest unlocks, I think, in value once you get to the other sides of these challenges.
I'm kind of curious how this marketplace works. So I noticed app.names /opportunities or / there's even investments. So really this question's two-part. One would be, why specifically did you choose the Ethereum network and even the Base network? Granted, there being tons of different layer ones. And then second would be, how does this kind of work? Do different brokers come in and they basically, after they've created an account, say, this is the type of product we're offering? Or does somebody come in and say, this is what I'm looking for? Like, what is the marketplace exactly?
Yeah, so Ethereum, we started 5 years building on. It seemed to be the only place in town, pretty much, that was worth looking at. Obviously, there's been a huge amount of development in L1 since. Being available on multiple, lots and lots and lots of blockchains hasn't been part of our strategy, if you like, but may grow over time. So that was kind of why Ethereum, sort of boring reason. Why Base? We're close with the Coinbase community and teams in different ways. Coinbase Ventures have backed us twice, so we that was an obvious place to start looking. We've looked at others as well. There's a few others to be announced soon. Base is obviously just EVM and low gas fees, and it was a nice seamless integration for us, and part of a growing partnership. And then how it works, it's very supply side focused is our market. So there's more of a manual, which we're digitizing and making much more seamless at the moment, but it's much more manual on the demand side. You're an MGA, a managing agent, or you're an insurer looking for reinsurance. You go through an application, it's approved by our insurance committee, and then you're running a program on Nayms. So when you go to app.nayms, that's really the experience as the capital provider, the investor looking to deploy into these different opportunities. On one sense of the marketplace, you have a number of different pools that you can deploy into. They cover different types of risk. Obviously, you can spread your exposure across all of them to get a more diverse range. We're currently in the process of launching what we call the senior risk pool, name pending, which is essentially our broad way of capturing the general asset class of insurance, so that investors, digital asset managers, etc., have a single point of entry to get a broad range of exposure. It seems that people are interested in the asset class as a very highly uncorrelated, diversified, priced asset class. Uncorrelated in the traditional world, that's how it's used, is allowing capital markets exposure to hurricanes have no correlation to general market downturns, but it's so uncorrelated to crypto because of the volatility. So this will be a great option in a bear market as well, which we like. And then you can drill down further and back different programs that pool may be covering, but this is to simplify the capital provider side. So it's to cater for a range of different reasons of different demographics of investors. If you're a sophisticated insurance investor and you want to be doing your own underwriting plan, you can even run your own program. We've just seen the announcement of Members Capital Management, who are a new licensed fund to work with Nayms, which we're very excited by. They've got some incredible underwriting expertise on their team, and they're looking to deploy sizable amounts. So they're kind of really owning that sort of pricing responsibility as well. Whereas if you were, you haven't invested in insurance before, but you kind of understand the fundamentals, you can deploy into a diversified pool and lean on the expertise of those that are engaged in the pricing.
Nice, very cool. And then so the next logical follow-up question would be, what's the actual onboarding process look like for both entities?
Yeah, I mean, pretty simple on the capital side. We've integrated with some subs, so you can go for it. Start your onboarding process. Can be done very quickly. There is a stipulation of sophisticated investor on the KYC side onboarding for investors. We are bringing out a name token very shortly, which has been about 3 years in design, which is much more caters to your kind of open, DeFi type investor, and the design is mainly funneling value through this Nayms liquidity facility, which participates across the market as well. So that's a way for that's for a more retail investor to get indirect exposure, so you're not on the hook for claims. And then on the demand side, again, we're greatly simplifying this process with the senior risk pool, because you're essentially applying for insurance instead of applying for a full segregated account, is what it's called, where you're running your own program. If you're doing that, then it's a know your business and know your customer check. But if you're applying for insurance, it's more streamlined.
Nice. So then going into the rest of 24 and even into 25, you just mentioned you're getting ready to launch a token, but are there any other major new features or developments or even exciting partnerships, collaborations that you want people to kind of be aware of or primed?
Yeah, well, I'll reiterate Members Capital. They've just come out of stealth, so go and check them out. I probably should know their URL, but yeah, memberscap.com, I think. You can find them through our LinkedIn. Very excited by that collaboration. Senior Risk Pool, as I mentioned, is a kind of a big initiative to simplify the process for investors to deploy into the general asset class, and it also makes it much more seamless to engage on the demand side as well. Much less of a heavy lift to get capacity, and it's not just capacity from the Senior Risk Pool will write, but any capacity available through our market. For example, we have $160 million of capacity for D&O and Tech E&O and so forth through a program run by a company called Evitas. If you're applying for insurance, obviously those protections will be part of your option set as well. So yeah, the rest of this year plus the token is all blocked out up until 2025, and we had our product offsite last week to kind of lay 2025 onwards. So yeah, some exciting things to come.
You were spot on the URL. I typed it in and looked. It is memberscap.com. So you nailed it. Well, this is great. I mean, how do people best get in touch with you, or if they wanted to reach out and speak to the Nayms team, like whether they're, whatever angle they're coming at, how to best get in touch with you?
Yeah, so nayms.com, NAYMS.com. There's a field to get in touch with the sales team. You can engage with me on Telegram. Dan Roberts 90 is my handle. Yeah, would love to hear from anyone interested in following this story.
All right. Well, awesome. Thank you so much for taking the time to visit with us, Dan. This was a wonderful conversation. I feel like I learned a lot. I had no idea this even existed. So like the fact that you've been there for 5 years, like, granted, I don't think many people are necessarily looking for digital insurance, but still like really learned a lot and really appreciate you taking the time to visit with us. For those of you who are watching or listening today to the Decentral Lounge, thank you so much for tuning in once again. And we will see you on the next episode very soon. Take care, everybody.
Bye.